Okay, the next question which we are going to do, is of November 14 P22Q2. November 14 P22 and Q2. Now, once again, I am going to say this that yes, you need to read the question. Kindly open your past papers to this question, give a good pause my video, give a good reading to the question at least twice for a better understanding. Now, what has happened is that there is a boy with the name of Ajib, and it's Ajib, not Azib. Azib, one from our class. It's Ajib. Ajib. Okay, commenced his business on 1st October 2014, and what has happened that he has purchased one motor vehicle whose price is 9600, life is 3 years, and residual value, often known as scrap value, is 1200. And on the other hand, he says that Ajib has decided whether to use the SLM method. He could either go for SLM method or he can go for reducing balance method. And if he goes for reducing balance method, his depreciation rate would be 50% on RBM. His depreciation would be 50% on RBM. Now, what do we need to do is, what do we call it? What you need to do is that we need to calculate depreciation for the 3 years. What if he was using reducing balance method, and what would the depreciation had been if he was using straight line method? Now, as we have discussed earlier, that there are two formulas of SLM, straight line method. SLM, there are two formulas. One formula is cost into rate, which is not applicable over here because we do not have the rate of SLM. The other formula is cost minus residual value over life. Now, this formula is applicable over here. The cost is 9600 minus 1200, the residual value, divided by 3. Now, that's what I am going to do on my calculator. 9600 minus 1200 and divided by 3, I get 2800. 2800 is my depreciation for each year: 30th September, 15, 16 and 17. 2800, 2800 and 2800. Whereas in reducing balance method, the policy is a bit different. Now, how is the policy different? The formula for reducing balance method is net book value into rate, and net book value is cost minus provision. Now, in year 1, the cost was 9600, the provision was 0, so I am going to multiply it with 50% because that's the rate given in the question. So, 9600 minus 0, I get 9600 into 50%, and I have 4800. The answer is 4800. Now, for the next thing, what do I have is, for the next year, 9600, and the depreciation charge till date is 4800, and then I am going to multiply it with 50% because now you have used the asset for one specific year. 9600 minus 4800 into, once again, 50 over 100 or 50%. The next year's depreciation is 2400. And finally, the third year, in year 3, what I am going to do is to calculate net book value: 9600 minus 4800 and the other 2400 of year 2. I'll subtract both of these to calculate third year's net book value: minus 4800 and minus 2400. 400. What do I have is 2400 is my net book value, and I am going to multiply it with 50%, and that will give me 1200. That's it. Now, this table was for 6 marks, and we have successfully attained 6 marks. Thank you.